We are live. Hi, David. Welcome to Venture with Grace today.
Hi, Grace. Very excited to be on the show. Big fan of your other shows and big fan of everything that you're doing.
You're awesome. So I'm also a big fan of yours. So before we hop on today's call, like I literally re-listened to your interview with Eric Anderson. So you started Syndicate. You started like working in venture capital because of him. And like later on, so okay, so I wanted to give the audience a little bit of your background. You are the co-founder of 10x Capital, and you prior to that you have worked on many entrepreneurial projects since high school. So do you want to start with the iSocket startup era?
Yeah, for sure. So funny enough, I just interviewed Dave McClure, who through Founders
Mhm.
Fund, one of the early investors in iSocket. So it kind of goes full circle. I met when I was at Indiana University at my undergrad. I met one individual that I thought was more ambitious than me, John Ramey, and I decided, okay, I need to invest into him because he's a better bet than me. And I invested. I pre-syndicated their basically did the entire pre-seed round. I invested $100,000. I had a online ticket company in undergrad. It grew to a decent size. It grew to 2 million in revenue by my senior year with, 35-40% margins. So it allowed me to escape the rat race of being a corporate employee. I had done a summer at Jefferies, which is a phenomenal investment bank, but I very quickly learned that it wasn't for me, which is something that everybody told me through the interview process. But I learned that live, and then I wrote the check for John, and he also had a co-founder, Zach Hassanin, who I had initially connected them with. And they moved out to Burlingame, California, which is a suburb of San Francisco. And I moved there shortly after, and I learned a lot of how to run a startup from John. I stayed with him, and I would badger him with a bunch of questions every day. And I learned things like from Dave McClure from Pirate Metrics and all these interesting things. And lean startup was big at the time, and through trial and error, I learned how to be an entrepreneur. But that was my genesis of how I learned what a VC venture backed company did. And that company ended up
Mhm.
raising over $15 million from some of the top VCs at the time, including Brad Fell and Jeff Clavier, and as I mentioned, Founders Fund, and that company sold to Rubicon Project, REBI, and Nasdaq.
When I think about your career, I think about kind of maybe three era. One is after that you like, so basically you had your entrepreneurial era, which is you created the selling ticket company, and that company was also it got acquired, right?
It got acquired, not for a large amount. What ended up happening there is I had an idea. So in high school, I was a ticket scalper. That's how I made my money.
Mhm.
It's a great training ground as a 16-year-old because it's really a cutthroat industry more so than finance. And I saw an opportunity and arbitrage between different networks. So back then, StubHub was just getting big. So there was StubHub, eBay was selling tickets, Tickets Now, tickets, a RazorGator, Ticket Technology. So I did an arbitrage, and we would start listing tickets that weren't available on the different networks. And over about 3 years, that arbitrage was arbed away. So we were a process company. A great way to learn how to start a business, but not a sustainable business. So we sold some IP, but outside of that, it was basically wound down.
I wonder, so like later on, like basically I also asked you how did you have the 100K to invest in another company, because back in time you were quite young, and like so that was from the ticket sales, right?
I was 100% from the ticket sales. My
That's
family
pretty
went.
good business.
Yeah, and it was a great cash flow business. It was actually a negative inventory business. I didn't know the term, but it basically means that we got paid for our revenue before we actually bought it, which was a great business model, especially when you're a broke college student. But my family came here with $600 in 1990 when I was 4 years
Mhm.
old from the former Soviet Union. We were refugees, so everything I had to build from the ground up, and just using resources such as books. I used to go to Borders 4 or 5 hours a day for many years. My dad would take me there, and I would finish my schoolwork quickly and start what I would call learning, actually things that I wanted to learn about. And I would sit in the business section. This was back when bookstores were a thing, and I would just read business books, and all of these adults would just look at me like I'm some very amused. But I was actually I ended up reading thousands of books over many years, and that was the basis. That was my original MBA before I got my real MBA.
Totally. I feel like your real MBA is now your current podcast, and like and you're like pretty much your syndicate profile. And okay, so after you had this entrepreneurial journey, you created this ticket selling company, you made a lot of money and then invested in your friend. And later on you started this like syndicate era. Can you talk about that? Can you talk about Flight Venture?
Yeah. So I went to business school. So as that company was growing, as iSocket was growing, I went to get my MBA. I applied in the third round. I applied the worst possible round. So I got into MIT and Dartmouth. I got an interview at Harvard Business School. The only school I didn't get an interview at was Stanford, which is very difficult in third round. So I ended up going to Tuck. I was the youngest in my class of 282 students. And then I came back and started a consumer internet company called Room Hunt. So this was my first real company, venture-backed company as a founder and CEO. And I grew that business. And we sold. I learned from iSocket that raising a lot of capital wasn't necessarily intrinsically valuable. Some businesses good, some not. You end up getting a lot of dilution as well. So in this business, I raised less than $2 million and scaled it pretty effectively. And that one was acquired in a real acquisition. But to answer your question around syndicates, I went to Gil Pinchina. Gil Pinchina, for those that remember, was one of the original super angels. Him and Jason Calacanis, who I work with today, they were the first two syndicates on AngelList. They were close friends with Naval. And I went to him and I partnered on Flight VC. I look at every single business as two aspects. One is product and one is distribution. Gil had phenomenal distribution. And since I've taken that over probably about 5 years ago, now it's essentially a subsidiary of 10X. We've grown that to close to 10,000 LPs. And we also are partnered with Gangels and Paul Grossinger and Max from Gangels who help us run that syndicate as well.
Can you talk about like how does the initial partnership look like? I know Gail kind of like wind down today, and I wonder when you join him, like he had the distribution, meaning assuming he just have a lot of people who invest with him on Angelus, and like what did you bring into the table, and how did you guys like work together?
Yeah, it's a great question. I can't speak about the economics specifically, but what
Oh, of
I
course.
proposed to him is I will do 99% of the work, and I came, with humility and with self-awareness that Gil was a big deal in the industry, and I was relatively unknown, almost completely unknown at the time. And I said, I'll do all the work, and we basically partner. You have a great brand, and we'll be partners. And I'd like to think that I fulfilled on that promise, and it's been a great partnership. I think it's probably entering its 6th year, and I'm certainly happy with it. I hope Gil is happy with it as well, and we've kind of built that. But basically, it's a arbitrage or a partnership between brand and reputation, and hard work and skin in the game.
How did you find like, Carta or Cruise or Discord back then and Dollar Shave Club? You guys have a lot of amazing brands under your portfolio. And like assuming they're probably really hot deals back then as well. Like it's hard to get in. How do you guys convince people to give like the syndicate allocations?
Yeah, so Cruise was Gil's deal, I think you're referring to. So I can't take any credit for that. But the other deals, syndicates are essentially a double-edged sword.
Mhm.
Their strengths and their weaknesses. Their strengths is that it gives a lot of exposure for an early stage company. So you get, I believe we're something like 9,000 LPs. Somebody might correct me, but you get to be in front of 9,000 LPs. And if you think about what an LP is, it's an accredited investor in the tech space. So it's somebody that has at least $1 million. So it's
Mhm.
at least semi-influential, if not mega influential individuals. So you get your name out to those people. That's also the downside, because not everybody, some people want to be in stealth. People might not want to know what you're around. So we work with founders there to really tailor their messaging in a way that shares as much about the opportunity, but also doesn't give away the secret sauce.
Mhm.
But a lot of people want that, especially consumer companies would love to be in front of close to 10,000 influential people. So it kind of sells itself. And then obviously your reputation precedes you. So if you treat people right, you could do a bunch of references, and I'm sure people do offshoot references as well. And they could decide whether they want to do a syndicate or not. But it's not something that we push too much. It's something that's either obvious to somebody as a value, or it's not valuable, or it might hurt a startup if they're in stealth mode.
Totally. I wonder, so basically you have this really cool entrepreneur journey, but how do you learn about, writing a good memo? And especially back in time, you guys are kind of like the pilot of the Angelus like era. So I wonder, how do you learn about how to do the quote unquote groundwork, or what you were doing back then?
Yeah, it's a great question. So, and back then, information was disseminated differently. There was a lot of blogs, and
Mhm.
actually, like Google Reader, which no longer exists. There hasn't been a huge thing to replace it either. Was a big thing. So I would read a lot of articles, and frankly, there was like one or two great articles a week. So somebody like Mark Schuster would write something, and I'd read it, and then you'd ask people. But on first principles basis, a memo is a logical argument for making an investment. So it's basically everything that you would want to know, and all the questions that matter in terms of making an investment. We've never, and I don't think there's value in just like doing check the box stuff. Like, here's kind of its HIPAA compliance, and here's the LLC documents. It's not really done for that. All that is basically accounted for in the AngelList system as already. So it's more about, what are the differentiators? What is the rationale for making the investment? And if you could nail that, you give people enough information in order to make a decision on whether you want to make an investment.
Um, when you are thinking about, so I have so many questions there, but I want to like just learn from you on like, how do you identify as your like unfair advantage, and then why do you feel like that suit into what you're doing today? And the other part is like, who is on your personal board of advisors when you first started? Because obviously nowadays we can see your BFFs with like Jason Calacanis, like everybody from the basically you're like friends with a lot of top tier people. And but back in time, how do you kind of like pick who is on your personal board of advisors, and then what are some advice that you took to get you to where you are today?
That's a great question. By the way, I think Jason might be BFFs with Elon. I'm very lucky to be partner and collaborating with Jason. BFFs, you'd have to ask him, but I've really enjoyed working with him. In terms of board of advisors, it's a good question. I could answer it, but basically, when you're starting out, most people are very signal driven. They're not really looking to invest into somebody. They're looking, how they say VCs are investing in lines, not in dots. So
Mhm.
they're looking for that progress. When it comes to people are more or less investing in dots. They want to know what you already done, unless they're hiring you. So that's a little bit more difficult to find people. So the MBA network was big. You mentioned Eric Anderson. Eric Anderson has been a mentor for me. Co-founder of Alloy and 82VS for a decade and a half. I've also had others as well, but typically the type of person that's been helpful is ones that are in the tail end of their career, either retired or semi-retired. They've accomplished everything that they've wanted financially, and they can now focus on helping other people and giving back. It's a natural progression that I've seen, and hopefully at some point I'll be in that camp as well. I like to help in general, but towards the tail end of my career, I'll be able to do it kind of as a primary function. But it's been individuals that have been around for many decades and that truly want to help, through alumni networks, through different affiliation groups, has been helpful as well. The Tuck network, the reason I went to Dartmouth and I picked Dartmouth is because it has such a close knit alumni network that's famous for helping each other. I think we have over 70% alumni contribution rate, which is like unheard of. I think Stanford is number 2. Last I checked, at like half of that. So being part of affinity groups, but you have to look, you mentioned unfair advantage. The way that I would categorize it is you need to look for people that want to inefficiently help you when you're starting out. People that shouldn't be helping you, but are helping you out of the kindness of their heart or for some other non-financial reason.
So basically you mentioned like you will find people in the MBA network or alumni network who are people who are retired. I guess like how do you first identify these people? And I feel like if they're retired, I feel like I'm maybe 7 degree away from them. So I don't really know how to.
That's fair.
Yeah.
You know, and I have somebody that I'm mentoring, and he's basically trying to get a job in venture. And the number one advice I could give, which sounds a little obvious in retrospect, is go into physical events.
Mm.
Everybody emails, it's lazy and it's ineffective. You have to go to physical events. So go to physical events. You only need 1 or 2 of these types of mentors. So you don't even have to go to so many physical events, but you have to go there. And if you don't live in San Francisco, New York, Boston, Miami, LA, whatever these startup hubs, Boulder, I don't want to disinclude anybody, but if you're not in those areas, then move to those areas or make trips to those areas until you find those mentors. Mentors are not done online. This is a rare exception where you got me on a podcast without physically meeting. This doesn't happen much. That goes more to your persistence and brand, but it's an uncommon thing.
I wonder, you have been on, so like basically okay, so after that, after your startup or like syndicate investing era, you have also like, so right now you're running 10x Capital. Can you talk about how you guys started 10x Capital? I know it's started by the other person, Han Thomas, and you kind of like help him, basically you co-founded this branch. So I wonder, how did the partnership establish, and can you talk more about like what you guys are doing there?
Yeah, it's a great question. So, a couple of things to clarify. Obviously, I'm co-founder, but I run the venture franchise. So we're an asset manager. We have private credit. We have real estate. We actually have an oil and gas part of our business as well. We have an entire kind of organization. Our chief investment officer is the former chief investment officer of CalPERS, who's building out the entire asset manager. In terms of how I got involved, this was about 5 years ago. It wasn't unlike my partnership with Gil Pincino, where I came to Hans and we basically mutually agreed that I would help build out his venture portfolio. But I gave a very similar pitch, which is I'll do 99% of the work and we'll be partners. And I built that over the last 5 years. What's a little bit non-traditional and kind of cool is that Hans made me co-founder retroactively. So, he basically surprised me a couple of years ago at dinner and he said, I'm going to make you co-founder because you've helped me build this firm. So it wasn't something that was negotiated. Hans obviously is a legend in the space, and there's quite a delta in our accomplishments, but he treats me as a co-founder and I lead the venture side. The basic premise of 10x Capital is how do you deliver alpha at scale? It's actually a very difficult problem in asset management because the more you scale, typically in most asset classes, the more you go into the realm of beta versus alpha. Alpha, almost by definition, is an unscalable competitive advantage that you have typically. The way that we've done that historically is our DNA is in data and analytics. We have some of the top data scientists on the planet, and we're able to leverage that in order to deliver alpha in different asset classes. For example, in real estate, Hans and his partner were part of the Triax CDO litigation back during the real estate crisis, and they developed tools around that in order to underwrite mortgages. So we use that technology in order to underwrite loans in our real estate business. And on the private credit side, we've been close to a decade developing proprietary tools on that and running a track record as well. So we do that. On the venture side specifically, the unique insights that we had, which is not very unique, is that venture capital is a highly bifurcated asset class, meaning top quartile outperforms other quartiles quite significantly. There was just a University of Chicago study that also showed significant persistence. So I believe the number was 60 or 70% of top quartile funds continue to perform above the median. But more shockingly, 45% of top quartile funds continue to be top quartile. So there's a persistence of returns. So we created a vehicle in order to invest alongside the top quartile and really the top decile funds when they're investing for the first time. So if Sequoia invests in the first time in a Series A, we invest in that company. So that's how we deliver alpha specifically in the venture capital space today.
I wonder, so you mentioned like Sequoia invest in a Series A, you would also invest in this company. Number one is like, you mentioned like you guys are data analytics. You guys have a really strong data analytics team. I wonder what kind of like are the signal kind of data you guys are searching for. If Sequoia invests in the Series A, you want to coming in the same run, or like are you trying to come in the second run, or how, like I guess like how does that information play in the entire
Yeah, it's a great question. I can't give away all the secret sauce, but I could tell you some stuff. For example, we consider partners as much as firms. So VC is kind of like an individual sport played with brands and with teams. You know, I don't know I guess it's like the golf where they have the cups, the Europeans playing the Americans, the Ryder Cup, I believe. So we look at that. We look at whether the fund is investing for the first time. We don't want to chase good money after bad. We look at the check size and things like that. Ultimately, it's not an algorithmic strategy. We do have a 4-person IC. So these are all signals. But you don't want to in VC. It's too hard right now. There's firms that have tried to completely be signal driven. I think it's a little bit, there's some issues with that. So we look at those all as signals in order to help navigate and make decisions, but we don't solely rely on those signals.
I guess like when you're thinking about fundraising from LPs, or like I guess like you personally have helped raise like over $2 billion from LPs, and I wonder how does your firm work with LPs, as well as like how do you build this amazing network of LPs in your orbit?
Yeah, so it's a great question. I think it's multifaceted. So if you watch my podcast, what everybody says, kind of a little ironic thing about dealing with LPs is that a lot of the relationship does not necessarily come down to returns, especially at the early stage vintages. So you might raise a second fund vintage before really knowing whether the first fund vintage perform. That's in venture capital. So the next underlying question is, what are these non-financial things that drive whether somebody will reinvest? And those are do you say what you're going to, do you do what you said you were going to do? So if you said you were going to invest a Series A, $1 to $3 million check sizes, 10 to 20 positions or 10 to 15 positions, did you actually execute on that promise? That's the number one thing. The number two thing is just management team and just making sure that the strategy there's not significant strategy creep. LPs hate strategy creep. But ultimately, I'll answer the question a little bit differently, which is dealing with LPs is a very long-term game, which means almost every market cycle you have a shifting power dynamic in terms of sometimes LPs, sometimes it's a buyer market, sometimes it's a seller market. And I think when it's a seller market, to use that term as a GP, you need to treat LPs right. And what does that mean? That means not doing egregious terms. That means making sure that they're properly updated. That means communicating any issues early and often. A good rule of thumb is to over communicate as much as possible. So you want to treat your LPs as partners, which sounds obvious, but most GPs do not. And a lot of GPs, some GPs don't even want to talk to LPs, which I think is a big mistake. But certainly a lot of GPs do not treat their LPs as partners. And I think that's something that we've been able to do really well. And frankly, there's situations where, things go wrong and you have to manage out assets and you have to be highly communicative. But those relationships are actually built and strengthened during down markets as much as up markets. So being highly communicative and being able to kind of execute on what you said you were going to do is really critical.
I wonder when you are like first entering this ecosystem, from your founder era to you're creating a syndicate and now you're running this like asset management platform. I wonder, how did you first encounter this group of LPs and how, like, because right now you also have a really successful podcast, how do you see media plays into this like venture ecosystem game? Because I've seen like at the beginning a lot of like VC started jumping onto creating their own podcasts or like uh, being on the media a lot more than the past. In the past, there was just like one or two people have a blog talk about how VC work, but now it's like every VC has a podcast, and then now we are seeing this open LP movement. Like every LP start coming into a podcast. So I wonder, how does media play in this LP relationship building ecosystem?
Yeah, so there's a couple of things to unpack there. One is Open LP, you mentioned, was a big influence on the industry. That was started by Beezer Clarkson and Chris Duvos. Both of them have been guests on my podcast. I think Chris jumped on your podcast, if I'm correct.
Yeah, last week. Well,
But
2 weeks ago.
yeah, both amazing people and believe in the transparency of LPs, of the LP ecosystem. Some of this comes down to philosophy of zero sum versus non zero sum thinking. If you ask anybody, they always say they're non zero sum thinker, but sometimes their actions prove otherwise. I fundamentally believe in our product offering, and I believe in myself that any LP that I kind of put on the podcast and share them to all the GPs, I still believe I'll be kind of at the top of their list from a relationship standpoint. Maybe that's overly arrogant or overconfident, but I live my life in a way where I believe in infinite games with people, and I believe that if you help people, that it comes around. So I've been putting all my LPs on the podcast, and that's led to this cascading effect where LPs introduce each other to me, and that's been a very positive thing. And frankly, it's been a great way to live my life as well, because it's great to live from a place of non-scarcity. But I like to highlight people. I like to bring what they're doing to their networks. I think a lot of LPs are managing billions of dollars, and even their kids don't know what they do. I had one LP who's like that, and he told me, for the first time, my kids actually understand what I do, which was pretty cool. So I enjoy that. But ultimately, the podcast, I stayed away from doing a podcast for a while because I didn't see a purpose in it. Just watching myself talk was something that kind of would make me cringe. So until I had a unique product to deliver to the market, I decided not to do that. And then me and Eric had a 3-hour dinner, I think roughly almost a year ago, probably 10 months ago. And he was starting Turpentine Network, which is a podcast network. And he told me about his vision, and I was very excited. And we floated the idea of doing a podcast together. Originally, it was called Limited Partner Podcast. Now it's called 10X Capital Podcast. And we've built a real niche around it. It's not a huge TAM, at least by number of people. It's a huge TAM by assets under management. And we've built this kind of cool niche. And we have some very avid, and we have high retention in our podcast listeners.
Yeah, I definitely, it's been like one of my favorite podcasts lately, and I really love some of the episodes, like the one with Eric and then the one with Michael Kim, and then like I also listened to Chris episode, of course, while I was doing my research. I really love all the questions there, and I wonder when you're thinking about um like building a functional LP network for your own fund slash like asset management platform, like can you describe what does your day-to-day look like, and how do you translate from like a really one-off relationship into like a business collaboration situation?
Yeah. Yeah, it's a great question. So I actually paradoxically look at podcasting as completely bifurcated between one-on-one relationships and relationship with masses. So I want to be spending my time either meeting with somebody one-on-one and having a 2-hour lunch or 2-hour dinner, or doing something like this and sending this out to hundreds or thousands of people. And I think a lot of everything in the middle is kind of a waste of time. Although I go to conferences and stuff like that once in a while. So I look at it as one is the way I think one of my hacks to building relationships with LPs. Every LP has a very specific thing that they're looking for. And most of the time, they won't necessarily tell you what they're looking for unless you have a good relationship with them. But I try to deliver on that, whether it's through 10x Capital or through other relationships, because again, I'm playing this kind of infinite game. So making introductions and helping deliver. I'm a big believer in mostly commonplace. I'm a big believer in double opt-in introductions. I will only introduce people when both sides have double opt into it. And I'm pretty careful about who I introduce to each other, but I'm very generous with those introductions. I do tens of those per month. I also introduce some of our guests, but typically the LP introduction comes from a trusted contact as well. So from a warm introduction, these LPs, as you could imagine, get hit up by hundreds, if not thousands of people on a daily basis. So it's hard to get through that noise. So being introduced by one of their GPs or by a peer LP has been something that's worked the best for me.
When you are thinking about portfolio management, or like how do you manage your time every day, what does your typical day look like? Because you have to manage the LP side of things, and you are also, I believe, in charge of like some of the investing, and then like overall like the company strategy. Can you describe like what does working at your current position look like?
Yeah, it's a great question. Every day looks a little bit different. We have one of the things that, so my partner on the venture fund is Zoe Wang, and we pretty much do everything together. And we're very careful in the beginning of the day to look at what we need to do versus what are the incoming things. I'm a big believer in conscious procrastination. I believe that's something that very effective people do. I think I spent like a year. I made a pledge for a year not to return any Amazon packages. And and there's extreme cases. I've been to very, very some of the most efficient people on the planet, and like their place might be dirty, and you might say, how is their place dirty? Because I'm giving an extreme example, but it's because they're focused on other things. So I'm a very big believer in opting into your tasks. And focusing on the big things. There's a book by Brian Tracy, I think it was called Eat That Frog, that really focuses on what tasks are you going to do? What hard tasks are you going to do every day? What are the 2 or 3 hard things that you must do today? Not like the 100 easy things that don't move the needle. What are the 2 or 3 things? I also structure my day in the morning where I do my most hardest and most important things, because energy gets depleted over the day. I'm a big believer in energy management, not time management. I don't actually manage time. I manage energy. There's a book. It's by Fior. It's called Now Habit. Highly recommended to everybody. But it's all about basically what I love about that book is he wrote the actual book using the system in like 8-9 weeks of basically managing his energy, not his time. So I read that probably 15-20 years ago. And I'm a big believer in kind of managing your energy. Maybe it was 10 years ago. So every day it's a little bit different. Today, for example, I'm working on I have a podcast with Mark Schuster coming up on Wednesday and Jason Calacanis. So I've been working on that. and working on some fun stuff. And then, there's always things that come in. You can't live your life just doing big things, or else, somebody's going to come and give you a parking ticket. You have to focus on small stuff too. But I focus on the big stuff first and the small things after the big things are completed.
I guess you guys have basically 10x Capital is an asset management firm, and what do you typically do? Can you explain to the audience what are the typical work for you? So you mentioned a little about in the morning you start with some important stuff, and then there is a podcasting set of things. What does a fun set of things look like?
Yeah. So, and I'm on the venture capital, so I'm exclusively on the venture capital side. So I'm very focused on that. I serve on some public boards as well, but I basically 95% of my time is on the venture capital side. And ultimately, I think no venture capitalist would be effective if they're not spending their time on their portfolio, on sourcing, vetting, and investing and helping companies. So I spend a lot of time on that. We do have systems in place, and we have a lot of tools that we use in order to streamline those operations. But that's a big thing of what I do. I also spend time on the limited partner side, both existing. You have to take care of your existing limited partners first before you focus on any new limited partner. So I focus on that, and also on new relationships. This might surprise you, but I won't actually I've taken one meeting in the last 6 months with a prospective LP outside the context of the podcast, because I find the conversations to be dry and just a dog and pony show where I'm just speaking the entire time, which I don't learn anything. I don't think it's helpful. It doesn't really build a relationship. But if I jump on even a pre-interview with an LP, I'm able to have a conversation between two humans, and I enjoy that. So I focus all my time. One of my hacks to having a podcast and having the time to have a podcast is that's basically has replaced my LP relationship time in terms of new LPs. So the podcast just didn't necessarily create new work. It just changed the nature of that work into a format that I enjoy more.
Do you feel like it can? I feel like doing an interview. Do you feel like doing an interview on a podcast is the same as you're having a conversation with them offline?
I think it's 10x better.
Oh, really?
For many reasons. First of all, LPs specifically are more tight-lipped, so they'll open up more during the podcast. They'll invest more into the conversation because it's going out to thousands of people. So answering, David's question versus answering the question of 5,000 people they're going to invest much more. They're going to be more prepared for it. And frankly, I look at a podcast kind of as a mini movie. So we're creating a production together. So we're actually kind of peers working on a production, and that builds a lot of camaraderie. And all credit goes to Zoe, who produces the show, and all of our editors. Our editors are phenomenal, and they do kind of very high quality work. So they're able to deliver a product that's really good as well. So, ultimately any conversation could be a podcast, but by making it a podcast, you make it higher quality and with much more intention.
By the way, what is it so I know you work with Eric's company, and I wonder how do you guys work together? Do you still have to have an editing team? Because from my understanding, if a podcasting company approach you, you're supposed to be just being the host, right?
Yeah, it depends on the construct. Turpentine is growing like bonkers. Eric has tweeted on it, and Eric himself, speaking about a brand, just has a phenomenal brand and followership. We have a specific we do our editing in house. It's just because we're an in office culture, and Zoe runs that. I think the other podcasts might be edited by Turpentine, but they have different podcast guests need different things, and we just have a very particular style to how we like to present ourselves.
Do you have basically a benchmark for guests on your show, or are they just your best friends and your best friends or something?
A benchmark as in what?
Just curious, what is it what kind of benchmark do these people have to meet? Either by AUM or like by relationship with David, like from scale 1 to 10, like are they
Yeah.
having to pass like the 5 bar to be on this show?
Yeah.
Or how
Yeah.
does it work?
And I'm always overly honest about these things. Basically they have to be impressive or somebody that I really like. There's
Oh my
basically
god.
two types two types of guests. Ones that have large accomplishments, and others are people that I want to build a relationships and are just like good people and I want to help. But if it's somebody not very impressive and that's not the best person, then it's not very compelling to me, because we put in a lot of time and effort
Mhm,
into the show. And ultimately I actually do the show. There's two benefits of the show. One is the relationship with the guest, and the other is the relationship with the listenership. And ultimately, maybe it's 60-40, but 60% of the value I get actually is from the guest relationship. That's more visceral. I see it and I feel
mhm,
it.
mhm.
The relationship with the listeners who I love, I only find that out kind of passively. Somebody will like meet me at a startup party and say, I listened to your podcast, which is great, but I don't get that feedback as quickly.
Mhm.
So it's important for me to put on guests, not only that I like. I mean, just because I like you, I'm not going to put you on the podcast, but somebody that I think our listenership will learn from and will enjoy. That's really critical. So I'm kind of a
Mhm.
gatekeeper for our listenership.
What does your listenership look like? Or like do you like who do you imagine are your like typical audience? Or do you have like an audience profile? So let's say a person
Yeah,
who lives in New York who runs
it's
a $10 million fund trying to grow into 200 million in the next 2 years.
I don't have a customer profile like that. Maybe I should, but it's more like emerging managers and other LPs. I
Mhm,
think the very top LPs want to learn what other top LPs are doing.
mhm,
And it changes. So what a top LP is doing today versus 3 months ago
mhm,
evolves. So you can never actually run out of content.
mhm,
Um, and the same guests could be interesting guests even for multiple episodes. We haven't yet had a guest come on twice, but that's something in the future that I would consider. It's kind of like taking a class from a professor in college. I
mhm,
rather take the most boring class from an interesting professor than the most interesting class from a boring professor. So I think
mhm,
people could be interesting on multiple points. But yeah, basically emerging managers and limited partners are who listen to it. Also VCs. There's VCs that listen to podcasts that want to spin off at some point.
mhm.
So they want to leave their firm and they're afraid of kind of taking the first step. And we've helped some of those spinoffs as well. So that's a big thing as well. But basically anybody that's interested in kind of the GP LP relationship. So I look at the venture ecosystem, and the startup ecosystem has three layers. You have startups, you have GPs, and you have LPs.
Mhm,
And what's interesting about that is you can't actually be a great LP without understanding startups.
mhm,
You need to understand what is a good startup, because you're picking who's going to pick the best startup. So if you have no context for the startup, then you can't actually be a good LP, I would argue. So we have guests from all three layers, from startups, GPs, and LPs. But of course, there's a focus on the LP side because that is the most relevant, and also that is the hardest product to deliver to people. That's the most exclusive product to deliver, and that's what people really rely on us for. A lot of people like the startup episodes as well, and some of those could be really interesting.
Who is on your personal CRM that like people that you're trying to build a relationship with? Because I feel like you've been really like you're such a hard worker. Like I mean, I observing you from afar, like I don't know if you remember, I met you in like a battery like cocktail hour
That's
or
not
whatever.
fun.
This is like I mean, this is 1,000 people 1,000 years ago, right? Like not
Yeah.
1,000 people, but maybe like 50 people there. So but I wonder when you are thinking about like who you're but like observing you from that point to like where you are now, you kind of have another leap from what you were originally building at Flight Venture, and now you're like a 10x capital, and you kind of like 10x or you kind of launch yourself to a
Thank
degree.
you.
And I wonder when you are having a really significant career growth, who is on your CRM? Like who are you trying to build relationship with and like why?
It's a great question. First of all, thank you very much for the kind words. You know, I I try to get better. I'm a big believer in compound interest in terms of personal growth, and I try to get 1% bigger. And over time, it's powerful. and we look at everything. Some of my friends are actually athletes, and they're always focused on these like micro improvements. I think there's actually a book on it. I haven't read it, but I think there's a book about like these small changes, basically compound. But that's kind of how I live my life. I have been told, some people have told me that I'm one of the hardest workers they've ever met. I just enjoy doing this, and I'm competitive. I want to improve, but I'm not competitive in the way a lot of people are in the podcast game and venture capital. I truly don't see it as a zero-sum game. I'll give you an example. So guests that come on my podcast, I actually try to get them on Jason Calacanis's podcast that we have together called Liquidity. And I also I just started building a relationship with this guy, Ted Seides, who does allocations.
Allocate. I think it's capital
capital allocators.
Yeah,
Thank you.
I like that one.
And I just sent him one of my top guests, and I know he'll do well, and he'll be open to more guests. But I want to deliver to our LPs. I want to get them exposure. Both, I just like people, and also I want to be of value to them. So I don't look at it from that aspect. I also look at the LP podcasting as not a zero-sum game, because from a practical standpoint, LPs don't have a single fund in their, they have typically 20 to 25 fund relationships. So if you could be super helpful to them, then I think you have a good shot at that. But in terms of personal CRM, I'm a big believer in, I used to actually be, I guess there's a PC way to say this, like a star chaser in the asset management side. So I would want to, I got really excited when I talked to Harvard Management and all these funds, and that's totally fine. I love Harvard Management. The problem is that it's a one-sided relationship, in that I can't be as helpful to them as they could be to me. So that's not the premise to build a really great relationship. Hopefully, in 5 years, it'll be more even keeled, where I could provide as much value as I'm taking from the relationship. So I'm really focused on that. Like, where could I provide as much value? Not because I'm some kind of saint, although I think it's important to be a good person in relationships, but because it's more of a sustainable relationship. So I look for kind of arbitrages. Sometimes those pockets could be very large. We have some great relationships in the Middle East with some phenomenally huge pockets of money where they're trying to access venture. And, sometimes they're looking to start their book. They start with brand names. It's a common kind of evolution of an LP. And I introduce them to brand names. And some people would probably think that's crazy that I'm introducing people to my quote unquote competitors. But I want them to be happy with the relationship, and we could build that over time. But I don't look at that as zero sum. But to answer your question directly with CRM, I look for people that could be of value in my life, and people that I could be of value with over the long term.
That's so interesting. How do you know the Middle East people in the first place? Because I don't know if there's an equivalent of like the Midas list, but for LPs. Do people just like Google everyone? Not Google everyone, but like a
Midas list for
everyone.
LPs. I think PitchBook, you would do that. But LPs, PitchBook will tell you who, but they won't tell you how. And that's the issue. So I referred to him earlier, Dr. Russell Reed. So that's our chief investment officer. He was formerly chief investment officer of CalPERS, of Alaska Permanent. And he also did a stint in the Gulf Investment Corporation, which is a development fund in the Middle East, based in Abu Dhabi. So he actually spends a third of his year in Abu Dhabi. And he has a stellar reputation, one of the nicest people you'll ever meet. So we're able to access, and the Middle East is very small. We're able to access through that. And then, I have some friends. One I had on the podcast, Ramsey Samara from Masick, and he's from a prominent. He works for a prominent family in Saudi, and that's a small network as well. So basically, doing well. Fortunately or unfortunately, it's not as easy to scale relationships as would be helpful, especially in venture, because you don't have returns for several years. But if you're willing to put in the time and willing to go slower than you might want, they're much more sustainable relationships. So you could build those over time. But to answer your question very pragmatically, is you need one great brand, one great relationship in a geographic area. We also have the same thing in the Nordics. We have great relationships in Norway and Sweden. We have an individual here, Patrick Hansen, who used to be a partner at SEB, one of the largest banks in the world and the largest in the Nordics. And he's brought us around to some of the top institutions there as well. And that's been, I think we've been working on that for 3 years and finally getting some traction now. So that's, it takes time, but if you put in the work and you have the right entry point, then you can be successful in different geographies.
What kind of drives you? Because I feel like that takes a significant amount of drives from some guy in Indiana to like where you are today.
What drives me? I mean, there's a couple things that drives me. One is my family. So we came here with almost nothing, and just being able to help my family, both my immediate family and my extended family, is huge. That's a big driver. I was lucky enough. My grandpa lived until he was 95 years old, and I was able to help my parents purchase a home with a basement where he was able to walk in. He was completely self-sustaining until pretty much like a month before he passed away. And just giving my grandpa that dignity, like it was like the most rewarding thing I've ever done. And that was a really great thing. I'm also driven. I always thought this was like PR BS when people would say about their employees and everything. I thought it was just a way to lower how much you pay employees by just saying corporate speak. But I really care about our people like a lot. And I'm very passionate about growing the team as well, because I really love our culture. And I feel like, especially because we're in finance, we're kind of providing this really non-toxic, like collaborative team culture in a space that could be toxic and everything. So I feel like we're helping people, and you see the effect on their families and everything. So that's something that really drives me as well. I'm getting married soon. I'm engaged and just starting a family.
Congratulations.
Thank you.
I saw that on Instagram.
Thank you
Such
very
a
much.
cool engagement proposal
Yeah,
placement.
it was very cool. And just providing for my family, making sure that my kids don't have to go through the same struggles that I have to go through is also very, very, very motivating.
I feel like the kids are, I mean, I have a 7-month-old, so like I feel like they're gonna go through a different set of struggle, like the parents are gonna go through. I'm mentally
And I mean, a lot of first generation wealthy people have almost opposite struggles. They want to make sure they're motivated and everything. So I have some tricks up my sleeve. I think we're gonna go like, there's like different schools that have campuses in different parts of the world. I think it's important to like have kids be adaptable and take them through struggles, but ultimately give them the safety of making sure that they know that they could pursue the career that they want to. I think there's a balance there, but I'm certainly no parenting expert. So I'm going to read a lot, and maybe I'll start a podcast and start interviewing young parents.
Oh, you should
understand the value and how to raise great kids. I actually know who my first guest would be. There's this amazing family that we're friends with that have the most amazing kids. So I'd like to interview her.
That's amazing. I will totally tune into that podcast as well. I wonder, when you are like, what does your information diet look like?
Yeah, it's a great question. So, and not to be narcissistic, but I have so many podcasts that I do a lot of research. Like, a lot of my information diet is actually learning about my guests and talking to guests and editing my stuff. So I end up watching a lot of my own podcasts, which I guess is a good incentive to making sure that's good.
Yeah,
It's
it's good.
making sure you don't want to listen to a boring podcast. So that's one. Two is a hack that I did is on Twitter, which had a pretty nice effect on my life, is I changed my Twitter feed from For You to following, because I tend to follow like mature and like optimistic people, versus the For You is all just like clickbait. It's all like negative, like this person's murdering this person, or this is why this group of people are bad. So that's been really, really good. And outside of that, I read a lot with the Liquidity podcast with Jason Calacanis. I have to be very on tune with all the news because we have a weekly news show essentially. So I read a lot about that as well. But mostly, I'd say I'm also a huge believer in whenever I have time, podcasts are great, but also timeless stuff. I mentioned I've read thousands of books. I really believe in timeless wisdom. I think everyone's like, this is how I did this in this market, which is great. But if you look at an ROI, if you're learning something that you're going to use for the next 30 years, it's a much higher ROI than learning how you did a trade in February 2024. So I try to do as much timeless stuff as well. I'm a big believer in books because somebody had to really so many people had to go through and make sure that was good before it was released. And then there's all these ratings. So I think you just have a higher success rate in terms of quality content.
What are 3 books that you've read recently that you felt like kind of changed your life?
That I've read recently. Let me look. The best books are always books that you internalize. So the best books are almost like the one book that really affected me early in my career, and maybe I over applied it, was called Never Eat Alone. Have you heard of that book? Keith Ferrazzi. So I gave that to a bunch of people. I'm looking at my book list. So that's something that I think has been good. What do I got? Recently, I tend to be pretty tactical as well. I read the Elon Musk biography, which I thought was really interesting. I also read a lot on Stoicism. So I think it's very interesting, and I think it's a good way to look at the world. What else? Been listening some non-business books. I'm looking. Let me get you one more. I read up on psychopaths because there's a lot of them in the finance industry. So I'll give you those 3. But one book that I really like on sales. It's called The Convincer. It's called the Challenger Sale.
Yeah. Oh yeah, I like the Challenger.
That's my favorite sales book. I think that's powerful. Very powerful book, and it's empirical too. So I highly recommend that one.
Totally. Can you talk about the psychopath situation? What are the psychopaths you have to deal with to read a book?
Yeah, I actually did a whole I studied. I did a master's psychology from Harvard, and I studied that just because I thought I wanted to avoid that. But basically on psychopaths.
Yeah, what are you reading about? Can you give us
course on what so actually I'll give a very, very, very useful thing. So in psychology, there's a thing called the Hare Psychology Checklist, which is a 0 to 40 checklist that basically is, I guess there's 22 questions. Maybe it gets updated, but basically you could actually do a psychopathy checklist on people to see if they're psychopath. And what I would recommend is don't prejudge whether someone is or is not. Just fill out this checklist in the context of a person, and you will get and when it is a psychopath, you're like, holy crap, it's like this checklist was written for this person, because there's a lot of patterns, and it's non-binary. It's 0 to 40 or whatever. So 0 to for some reason the one I sent you is 22 questions. I thought it was 20 questions, but it's essentially it's pretty predictive. And one thing to note for people about psychopaths is that people are born. It's actually a huge societal issues of what to do with them, because it's in their DNA. They're impossible to change. So don't try to reform a psychopath. It's literally impossible.
Oh my God, that's crazy. I just feel like I believe you, and I feel like some of them are really invisible too. I feel like you meet someone who is super nice, but they turn out to be crazy.
Yeah, there's a couple things to do. One is that great psychopaths are invisible. It's like great salespeople. It's not the people that everyone says is a great salesperson is not a great salesperson. They're a pretty good salesperson. The people that are the best salespeople are the ones that you don't know are salespeople. like some top politicians. So same with psychopaths. The ones that everyone thinks are psychopaths are not the top ones. Not to scare you. The second thing to say about that is that psychopaths actually follow a power law distribution, which means they're only like, I think 1 to 2% of the population. Somebody could correct me. They're a small part of the population, but they create a disproportionate amount of destruction in society. So it is kind of negative power laws. So it is good to educate yourself on that as a defensive measure, or just like check out the checklist. But again, you cannot reform a psychopath. So it's a very predictable and wrong thing to do if you come across, because psychopaths can be incredibly charming and you want to reform them so badly, but you can't.
But how do you how do you first discover if someone have this, like maybe 1 or 2 things on the checklist? Because I feel like it's really hard. Like if you're like trying to prepare yourself to when you encounter everybody, like it's like,
Yeah.
oh, your life could be really, really stressful. But sometimes when you realize it's maybe too late, like how do you kind of have them until
Yeah, and
you
I mean,
pretend to?
and I don't, yeah. So you saw Eric Anderson's interview that I did, and he talked about pronoia, which is
Mhm.
basically
Yeah.
assuming that people are good.
Mhm.
I start with that assumption as well. So you don't want to be cynical. It's just there's good things to know in the back of your head for what a psychopath would do, so that once there's repeated behavior, you could be like, oh, maybe that person's a psychopath. But I don't run around with a checklist when I meet somebody. But from a practical standpoint, it's like, is somebody making your life better? And is somebody, another word for psychopath is a parasite. So are they making your life better, or are they making your life worse in a charming way? So a psychopath, just like any person, is known by the fruits of their labor, by the outcomes of being around them. So that's a good, or around her. And that's a good sign of whether somebody, by the way, there's much more male psychopaths. I don't know the exact distribution, but it's vastly more male. But you know, seeing that is a good starting point to see how, do you benefit from having this person around you, or are you being hurt by that, whether they're a psychopath or not?
Do you feel like a lot of your Harvard study have been useful for your business life?
I think so. Yes. I did the degree. I kind of had the degree. I catered it to my own needs. I kind of was entrepreneurial about it. I framed everything in the context of what I wanted to learn about versus what the professors wanted me to learn about. That being said, one of the things that I learned between my 2 masters, from MBA to master's psychology, is that for my master's psychology, I focused on understanding what my customer wanted, which is the professor. So I would build rapport in order to understand exactly what they needed from me in order for me to get the grades and pass the class. And after I understood that, then I could optimize around my own learning. But I understood that the education system is intrinsically a dictatorship, where it's in many ways even worse than dictatorship, because there's no independent. It's like there's no way to challenge the results. So it's like a dictatorship without even like a fake court. So you have to do whatever. There's only one judge, jury, and executioner. So you have to ultimately do what the professor says. But within that context, within that frame, you could optimize it around your own thing.
What are, I guess, like another problem, another question is like, you have made a lot of money back in time in the ticket sales, and then now you're working at this like amazing asset management platform. Like I feel like you have been making a lot of money. So I wonder, what's your thought process on like, the entrepreneurs who are not like, who are giving up a job at Google or whatever and then grind for multiple years? Is that like a good way, or like do they have to be profitable since, like, I don't know, year 2 or something?
Yeah, it's a great question. So there's a couple. By the way, one thing that happens in every evolution is like this dip. You make money, you invest it, you make mistakes, and then if you push through it, you become better. You become more conservative, more calculated, and everything. So I certainly have lost a lot of money as well in investments. I'm not a huge spender, but investments. In terms of in terms of what an entrepreneur should do, I would follow Sam Altman's advice originally when he was president of YC, and he talked about individual burn. It's a good way to put it. But entrepreneurs, especially in their 20s, that's why it is easier to be an entrepreneur in your 20s. You need to keep your burn down. So burn is something that once it reaches a certain level, it stays at that level and it can only go up. So you need to, from the very beginning, keep your burn down. That's easier as a 23-year-old or 24-year-old than it is as a 34-year-old. So starting early. And so you have to, being an entrepreneur is this paradox. Some of the most successful entrepreneurs are people that are very aggressive. There's a poker term for it. It's called tight aggressive. They don't play many hands, but they're aggressive. Same thing with their personal finance. They're not really like money driven. They're not driven by kind of like status symbols. They're driven by achievement. I would put myself in that camp. I certainly like some nice things, but I'm not like, oh, I need to buy that watch or that car. I don't really think about that. I rather just put that money into distribution and reach more listeners. That's kind of what's interesting to me. So keeping your burn down a lot. If you are at Google and you're making $350,000 a year, great. Take that $100,000 a year delta and start investing in the stock market or whatever, or put it in 5% treasuries, and making sure, build that runway for yourself. If you want to have freedom, you need to have a minimum 6, ideally 12 months runway in your life. Otherwise, you're just a slave at your job, even if you're making $500,000. There's a lot of people in finance, especially bankers. They make $2 million, they spend $2 million. They're essentially still slaves to their job. To me, freedom has always been much more valuable than financial stuff, than status symbols. So I've been investing that for times when I would need to spend it and when I would have to essentially pay for my own freedom.
When so you mentioned you and Jason have like this new Liquidity show. Like I was listening to it this morning. You guys have maybe 4 episodes or something. There's Michael Kim, and then today you mentioned there's
I think maybe 5, but maybe 4. Yeah.
Something like that. Yeah. And I wonder, like, what's your research process look like for each of these episodes?
Yeah. So the Liquidity podcast is kind of like all in minus the politics. So it's based on venture and everything. And we just look for what happened last week that's interesting and that our guests could opine on. Right now, the format is 1 LP and 1 GP on every episode. Jason and I'm the moderator. It allows Jason's, I actually do think he's the world's greatest moderator. I haven't talked to every moderator on the planet, but he's so good. But he wants to basically be in the shooting guard position, as he says it, versus a point guard. So he wants to talk more about his venture experience. So I tee him up on stuff as well. But basically, we're talking about what's happened in the last week in technology. But my source of news is everything, because it's not easy to have a once a week news show on technology. It's very niche. So I scan the globe, and if somebody has interesting stories, send them my way, because we spend a good amount of time. But whether it's TechCrunch, Information, Carta, PitchBook, general news, tech meme, we scan everything.
By scan, like, what do you mean? Like, so you just literally mentioned like 75 like different resources that you would take a look at. Like, would you go on ChatGPT, be like, hey, generate me like 75 things from these publications? Or how do you
what do you mean by 75?
Like, not 75, but like you just mentioned a lot of, like, you mentioned like, the tech meme, the Carta, PitchBook, the Information, literally everything. So if you go ahead and then read, let's say, like everything that has been published that morning, even just skim, it's going to take you like 75 hours.
Yeah. I mean, to be honest, I read the titles, and then once it's interesting, I read the article, but I'm mostly reading the titles, but it's maybe 40, 50 headlines per day. So I manage. It's also how I get my information diet. I become really, really in tune with tech news. So that's been fun as well, but it's not that bad. And of course, Zoe, my producer, does a lot of the work as well. So we partner on that. So we both kind of scan quite a bit of stuff.
When you're thinking about your future, what does it look like? So I feel like you're very smart on like building these like really strategic relationships with everybody. And I wonder like how does a relationship with Jason first started? And then obviously you guys are doing like a lot of these shows together. I feel like you're basically like one of the OA people now. So
I don't
in
want to get sued. But I actually know I've interviewed two. Interviewed Jason, David Freeberg. I know
Mhm.
David Sachs. Shamath follows me on Twitter. I think their show is great. I
Black.
listen to every All In podcast. I'm a big fan of the show. It's a completely different kind of show. But in terms of what I like to do, I've learned, I didn't know this until I only started podcasting 6 months ago. I didn't know this, but I have a creative aspect to me. I enjoy creating a show. It's kind of like I mentioned, it's like a mini movie. It's a very creative process, and you have something that people watch. It's pretty cool. I
Mhm.
don't know if you've had that same experience, but it's a pretty cool thing. Like it's different than like writing. I'm a pretty good writer, but it's much more three dimensional.
Mhm.
So continuing to do production stuff like that. I enjoy talking to people. I enjoy showcasing people. I really love highlighting people to the overall network. I love I love having what people do and the impact that they've had on the industry highlighted to thousands of people. It makes me feel very good. So I want to continue to do that. Tech is ultimately a niche network, but I enjoy bringing content to the community, and continuing to improve that. We talked about it earlier. I want to improve every show 2 to 3% week after week, and continue to improve that. Jason has been an incredible mentor in terms of my moderation skills. He's just brutal but incredibly
Mhm.
efficient, giving me feedback. He's like, "You did these three things wrong," and I'm like, wow, that's great. Like, let me process that. And then next week, I integrate that. So his management style is really interesting. I've actually like grown my own management style just by the way he gives me feedback. So he's been really good on that, but we're going to continue we have some really big names coming up. I think one of the things on the Liquidity podcast is name recognition is huge. It's a huge determinant of viewership. So we're going to bring in big names, but having really interesting people talk about the news, and having new voices on the podcast is something that I'm excited about.
Um I guess like when it comes to like you guys, you mentioned like you guys will bring in like big names, and I wonder, do you pull people from your network or primarily Jason pull people from his network? Obviously, your network is also amazing, and just
Yeah.
curious how does it work?
It's up to this point. It's been 100% my own network. I'd love for Jason to help, but he's incredibly busy. He's doing all these podcasts and all these things and fun. I think he has 21-person team on his venture fund.
Mhm.
But up to this point, it's been 100% my network.
Um, how do you manage to have like a bunch of people on your own show and this new show, and how do you make it all function? Do you like send like
Time
a
wise.
million, yeah, or like I guess like strategic wise, like how do you kind of like make a operational streamline for yourself? Like do you sit there to invite like 75 people in one day, and then you like spread them into like a different
Yeah,
days,
I've
or
done
how?
some batching, but ultimately it's just one-on-one introductions. So no matter how many times you email Mark Schuster, he's not just going to jump on your podcast. I know Harry Stebbings has emailed Mark Benioff like 53 times or something, and I'm sure he'll get him on, but that's also because he's Harry Stebbings. So I don't believe in that. I believe in high quality personal introductions. So I do that, and that goes back to building the political capital and social capital with people by delivering something of value to them, whether it's having a good show when they come in or introducing them to people. So it takes time, but it is scalable, because the nice thing about a podcast is once you do something with somebody and you produce something and they send it to their network, even though it takes a lot of time, it actually builds a relationship for quite a while. So it is a sustainable business model versus a lot of people will jump on, as I mentioned, these random LP calls. And yeah, maybe they could do 5 in a row in 2.5 hours, and where it takes me 2.5 hours to produce everything. But none of
Only
those
two and a
five,
half hours? I'm just kidding.
yeah, yeah. Yeah, so it's all about your business model. I believe in high quality, high investment programming, but other stuff works as well. So I'm always open to new models as well.
How do you like follow up with the people who are on your show, or like how do you intentionally uh like basically making the relationship more solid?
Yeah, it does become solid pretty quickly. But I do a lot. I intro a new guest. I send them our guests, and I say, hey, who would you like to be introduced? And then I do double opt in. So I'm constantly introducing people. Also, because most of our content is evergreen, our podcasts get a lot of views months in the future.
Um,
Um,
I
so
w-
so they're kind of aware. They get reminded of me passively.
what like I guess like do you convert them into business relationships or primarily just like becoming buddies, but like in the more light way as like
Yeah,
introducing
for
people?
sure. But very importantly, um, I do believe in it as a very long term thing. I have no issue like talking to people about business or talking about different funds because I believe in everything that we do. And if I don't believe in it, then we don't do it. But that being said, you know, different strokes for different folks. So some people I mentioned, large sovereign wealth fund in Middle East, they don't want to invest into a venture fund as 10x capital today. They want to come into Andreessen or Sequoia. So I meet people where they are and I help them there. So I do help them. So it all depends what they need. But yeah, I just find out what they need and I deliver it to the best of my abilities.
Um, on that note, I know that you have another call soon, and I want to be mindful of the time. One last question is okay. There's like a quick rapid fire,
Okay.
which you already answered some of
Very.
them. So the number one is like, what's your favorite book? You answer the 5 books.
My favorite book is Challenger Sale.
Mhm.
The book that will change people's lives the most is Challenger Sale.
Who would you invite to your dinner party?
How many people?
It's your party.
If one person that I unfortunately was invited to Thanksgiving dinner with Elon, true story. I couldn't go because my parents and my fiance's parents were meeting for the first time. So I'd like to meet Elon
Oh,
at some point and find out how I could help him. I don't want anything from Elon. I want to see if I could be of help in Elon's army. So that's something that at some point I look forward to.
oh, that's so cool, and that's like super sweet of you too.
Thank you. Tell my
Um,
fiance
oh
Jessica
my god.
message her and tell her how amazing I am.
Yeah, send her this clip. This is going
Yeah.
into a clip.
Going viral.
Totally going viral. Um, who made the biggest impact in your career?
One person. I'd say two. My co-founder Hans. He. So I'd say actually two and a half. Eric Anderson, who you mentioned, the podcast, he brought me into venture. My partner Hans, who retroactively made me co-founder and believed in me. And then the half, I would say Jason Calacanis, not because it's a half, but because it's a new relationship and it's more recent. But the thing that all three of them have in common is they all, going back to the mentor thing, they did something that's very rare, which is they believed in me before I had those empirical data points, and they invested in my growth versus in my time right there. And that I've learned that's something that's common in school. I
Mhm.
tell this to university students. But once you're in the real world, everybody just wants to know what you could do for them. And those three people invested heavily into me and believed in me as a rough cut. Jason, he saw my podcast before he gave me all the feedback, and he's like, essentially, you have a lot of potential. Let's do something. Implicitly, that's what he said. And then he gave me the feedback and made me better. And I really value all three of those people.
Um, what do you think make people want to believe in you?
That's a great question. I think I really care about people, and I think that's people see that. I think especially very successful people, they don't have as many people that really care. It's a weakness and a strength. Going back to psychopaths, sometimes I invest in the wrong people. But I truly care about people and relationships, and I think that is a differentiator. The higher up that you go, I think it's a pretty significant differentiator. So I lean into that and I say, hey, you're gonna get an amazing friend, a VIP friend. I'm gonna do all these things. I'm gonna care. I'm gonna remember your birthday, and hopefully you invest in the relationship.
Amazing. Where can we find you outside of work?
On what?
Where can we find you outside of work?
Where Equinox.
Oh
I
my
go to
God.
yeah.
What do
Find me
you
in
do in
Equinox.
the gym?
I
Do you
do.
like
Well, I
lifting or
do.
like?
I work out. Yeah, I do all of that, but also a huge believer in sauna. A lot of my friends are trying to get me to do cold plunge. I haven't found it in Manhattan. They swear by it, but I do. Sauna once, sometimes twice a day. Huge life hack in terms of like taking away all the stress in my life. And I go with my fiance Jessica as well. I've gotten her into it, but that's a big thing. And also Miami. I don't know if that's a
Oh
that's
my
a
God.
if
You
that's
sound
a
like a retired man, but anyway.
yeah, no, I love Miami, and Miami is as much of a geography as a vibe. So we try to get out there, especially in the winter, as much as possible.
Awesome. Thank you so much, David. Where can people find you?
Thank you, Grace. Check out my podcast as well, 10x Capital Podcast. You can
It's a
just go.
really great podcast. Everyone should check it out. I feel like
Thank
every episode is like super well produced, but keep going.
Thank you. So just 10xcapitalpodcast.com. And then also on Twitter, D Weisburd, DWEISBURD, just like you see on the screen. Those are two things. And if you want to get in contact with me, you could email me at david@10xcapital.com, 10xcapital.com.
Amazing. Thank you so much, David, for coming on the
Thank you,
show
Grace.
today.
I've really enjoyed it. I really enjoyed the relationship, and congrats on everything that you're building.
Thank you. Okay, let me unstream.